Well, welcome back, everybody. I hope you guys had a phenomenal active trading and investing week here last week. There were so many incredible opportunities. I've tried to do a couple of videos throughout the week. I was trading every day this week. Just how could you not want to take advantage of these incredible opportunities? So, with that being said, as you're enjoying your weekend here, there's a key thing I want to teach you, and I'm trying to do these little videos here while I can, leading up to the Wealth 365 Summit and also some really exciting things we have for you there. So, with that being said, as we're taking a look, you'll notice I actually have no indicators on my charts whatsoever. Of course, I am feeling extremely naked and vulnerable right now. So why in the world would I do that, right? Because of course, why in the world would I ever, with all the wonderful things that are happening with me and my trading right now, and my of course past performance is not indicative of future results. You saw a video from Ziad actually last night where he initially was trading against some of my work and he suffered losses. Then he turned around and got right back on with my work and then ended up the day strong. So that's why I always try to warn you guys, past performance not indicative of future results. If you wake up on the wrong side of the bed to decide you're Superman or Wonder Woman and you just want to ignore everything that's around you and your surroundings, bad things can happen. So, but I wasn't ignoring my surroundings this week. I wasn't going around ignoring them today. We have roughly 31 minutes or so left on the trading session here, but I'm done. I'd actually long since warned people that I was done. I went into the live trading room and actually, announced that while Ziad was in there, that I was done, and we broke down the reasons why. And let's go ahead and hit you with some of these things because this will be important for you whether you're a day trader and actively day trading or you're an active swing trader there as well. Some of these things are going to be important. So let's take a look over here. The first thing I want to point out is where the SPY is on a weekly level. You recall for several weeks now I've warned you about these distribution bars up above here, and then the accumulation bars are down over here. So being that those accumulation bars we opened up, you'll see this week into that area, and immediately buying stepped in just as it did right over here. Now, but of course, as we started getting back up into this area, distribution is really heavy right up here. We failed that area and rolled right back over with all the negative news from the prior week, with the bank failures and that. So how does that affect today? Well, going into this afternoon, I'd already went in and had a lot of great trading on the board, and I said I'm done, and here's why. What we pointed out the accumulation. There was all this happening on the daily charts. All these different this activity that was happening on the daily charts, but the hourly charts was what I was really focusing on here in a couple of lower time frames I share with the group. So we had this big distribution bar right here, and this big accumulation bar right here. And so what was happening on the lower time frames when I was showing this was at that time this market was just whipping. So I said I'm done these last couple hours. We came, we saw, we conquered. It's been a phenomenal week again, and today was a great addition to that. And so what I was pointing out very heavily, and this is why I want to make sure you guys are learning from this accumulation bar down here and the distribution above. So what's happening was you get this feverish movement into that resistance, and then it would roll over and die a horrible death. At the same time, then, sure enough, what happened, within the hour I came in and said to everybody, hey, I don't want to take any trades here because of this accumulation. It could whip right around in reverse. Well, that's exactly what it did, and that's what's important for you to note. When you spot these key accumulation areas, these key distribution areas, be it on an hourly chart like this, be it on the weekly charts like this, right? And you see there's three of them, three big accumulation bars back to back to back over here. And so coming right into this week, we bounce right off of that. And so the thing is, when you see it, whether it's a weekly chart, a daily chart, an hourly chart here, I'm always suspect when we start pile driving into that. Well, sure enough, right after I got done having this whole conversation, within that same hour, it went in and went right back down there, made it look like it was going to heck in a handbasket there. That was, all over, and the market was just going to sell off big into the end of the day, and then immediately swooped right back up there off that accumulation area area that I warned everybody about. And you can see, putting that in dollars and cents here, it was roughly the 39.33 area. This is on the S&P, up to over, roughly the 39.56 area here. So it was well over 7 times the normal retail trader stop loss that this went up, right? Even on this single bar where it went boom, 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 it turned right around on that bar and stopped out so many people, because that went up there. You could see in that 1 5-minute bar had gone up over 12 points. So about 4 times a normal maximum retail trader stop loss in that singular bar, let alone then what happened afterwards. So the point with all this is I'm taking all of the indicators off of here right now because I want you to focus on key support and resistance and how that is such an important piece. I can have these great indicators that say buy and sell and everything else, and they sure did today again, right? You can see the screen here. I grossed what, $2,500+ again today. That's great, right? But past performance is not indicative of future results. If I'm not mindful of key support levels, be it on the hourly chart, key support levels, be it on the weekly charts, right? Or the key resistance levels. If I'm trying to catch a dead cat bounce here and thinking that maybe this is a bottom instead of just a dead cat bounce and trying to go long, well, guess what? I'm going to get hit pretty hard potentially up in the resistance here. It's just like if I try to say that's it, it's the end of the world as we know it, going to go and go short, can get caught really hard, on the short side. So it's so important. So, the vast majority of the time, because I'm a technical trader, and so all the incredible things that I'm doing are a result of my technical tools, there's also this component of technical tools that relates to this key support and resistance. And so I really wanted to hit this kind of hard with you today and figured let's take off everything off the charts except for this, so that now, for all of you that were in the trading room, of course, you got to see all this and see all this key support and everything. For everybody else, I want to make sure you are seeing it and that you're paying attention to these kind of things, because otherwise very bad things can happen to you very fast in this market. Like literally in a singular bar, this market can turn around. And of course, that's no different. I'm focusing on is a couple of intraday charts here, but over here, this is the weekly SPY. So this is the same thing from a swing trade perspective. If you walked in Monday morning and shorted the farm, this market has not been good to you this week. And so there's these huge opportunities on both sides of the fence right now, especially until we break through these 3 layers of key support or these 2 layers of key resistance there. Those are key things that we're watching right now. And so I just wanted to hit you with that, because then that breaks down to the intraday basis, with those things too. And that's where you got to watch out for those big reversals that can just be breakneck. Whether it's day trading, swing trading, there's so many opportunities as long as you're paying attention and respecting the market and respecting the risk, which is why I said, look, I grossed $2,500. That's it. I'm done for the day. Bears make money, bulls make money, pigs get slaughtered. Don't be a pig. It just wasn't worth it with the key support below us and the resistance above us. And like I said, no sooner did I say that going into that next hour, the market went ahead, took people for a ride that tried to get short down there, back up. Okay, so huge lessons there. I hope that helps. I hope that makes sense. We'll try to share more of those things. We've got some big things, speaking of really powerful strategies and tools and everything, that are becoming up the upcoming Wealth 365 Summit. So if you go to joinwealth365.com, joinwealth365.com, you can go ahead and join me there. I've got special classes there. We got some special world-class economists that are going to be there. Economists, best-selling authors. So some people you've never seen on the show before that are going to go and be, given some very timely information there as well. And I'll be right there alongside of them, my award-winning strategies. So you guys have a great rest of the weekend. Please commit to memory what I just shared with you, because it really brings it in full circle how we do these things. All right. We'll look forward to seeing you in upcoming videos, and of course at the Wealth 365 Summit. There you go to joinwealth365.com. Take care, everyone. Have a great rest of your weekend. Bye-bye for now.